Okay, so I'm pretty excited about this next panel. We're calling it the future of payments. It's about fintech and SME fintech, essentially, kind of what the trends are, what's going on with the payment space, et cetera. There's a lot of offshoots to that topic, and we'll get into as many of them as we can in 30 minutes. So I'd like to get my panel to come out and join us. Yeah, cool. We can do mask off up here. All right, we got three great companies represented here, three great speakers. What I'm going to ask, like what I always do, is just kind of go down the line, tell us who you are, a little bit about your organization and what it does, and then we'll get into the Q&A. Just start out, Bill.
I'm Bill Sedgwick. I'm with Pinnacle Cart and Pinnacle Commerce. We run a full-service e-commerce cart company, and we also have a payments company that we set up behind it.
Hi, I'm Dave Galvan. I'm with MasterCard. I run our fintech engagement practice. So I'm the guy who talks to lots of fintechs, probably 400 or 500 a year. Very much an operating team, so my job is to figure out what folks are working on, help them get products and services to market, and continue to manage those partnerships as they grow and get big.
Hello, everyone. My name is Mike Cohen. It's great to be here. Great to see people in person again for the first time in a very long time. I'm from Square. I lead the partnerships team. My team oversees how we work and integrate with everyone from the Facebooks, Apples, and Googles of the world, all the way down to the long tail of partners that focus on small and medium businesses. We have an app store where we are constantly trying to surface the right partners to the right sellers at the right time.
All right, so I'm going to start with almost kind of a dumb question, which is sort of what is fintech? But I think specifically in the SMB space, fintech can mean a number of things. People think of it as just payments, but it's a bunch of different things. So I don't know, Dave, why don't you start since you were in that practice? Sure. How do you define it?
Yeah, I mean, I get this a lot. Fintech in a very simple term is basically anything digitally enabled that connects to the banking system. Right, and so I actually view fintech a lot like I view the SMB world, which is it's not a vertical, it's a horizontal, right? And so fintech is made up with hundreds of little verticals. Everybody knows neobanks, the Chimes, and the Dave.coms of the world, but then you've got SMB, BaaS, SaaS, and then you can slice a vertical like a neobank up into vertical neobanks, right? And so it's just a lot of verticals, all for the most part providing some financial component that's more or less trying to disrupt the traditional banking system.
Okay, that's about as good a definition as we can come up with. So specifically around payments, again, the COVID conversation has been a thread through everything, and we don't want to be repetitive, but in fintech specifically, it was obviously massively transformative. But the question I kind of put you guys in the pre-call was how much of it, what was reactive and what sticks? So what is the sort of the permanent outcome of the COVID disruption? In payments specifically. Go ahead.
Yeah, I can say from the Square point of view, we don't think of any of the changes that happened as like an interim change. We see it as permanent. Mm-hmm. Of course, as we heard throughout the past 2 days, acceleration of trends. I don't see things going back. And I don't see things going back mostly because it's the consumers that demand it. So whether the SMBs want to change or not, I think is more sort of dictated by what buyers want. And if you get used to, ordering ahead, if you get used to tapping, it's really hard to go back with that. Even with the in-person world, websites will still be, order ahead. And in the past, where you'd sometimes see, like order on the phone, pay in person in cash, I think that's pretty much gone for now. So I think the changes are here to stay.
Yeah, and I would add to that I think it's going to keep growing. I mean, it's here to stay, and it's going to accelerate. I think in the next 5 years at least, e-commerce as a general sector is going to continue to grow faster than any other sector.
Yeah, I agree. The interesting thing about COVID is it definitely accelerated a lot of adoption of traditional banks and other folks to stay relevant, but the real change happened at the consumer level. Consumers just engaged differently, during COVID than they did pre-COVID, and that behavioral change. Once you sort of cross the chasm of that behavioral change, once my dad figured out how to work Netflix, oh my God, he's like, then he got Amazon Prime, and he's like, there's no commercials, right? So we learned all of these behaviors during COVID, and those behaviors made lives a lot easier for people, right? The Amazon delivery, watching Netflix, getting Grubhub delivered, getting groceries delivered, getting drugs delivered, all those behaviors for the most part are here to stay because they made lives easier and better for people.
So an offshoot of that is the treatment of cash. Cash, it's been a conversation for a long time. Cash is dirty, cash is dangerous, only folks who benefit from cash are criminals. The Sweden example from a few years back of, the big robbery. I don't know if anyone knows this story, but there's a massive airport, robbery in Sweden where a huge amount of cash was stolen. It was like one of the great train robbery kind of things, and that led the government of Sweden to make going cashless a national objective. I don't think they're quite there yet, but they're very close. So that's been going on for a while, but COVID, made cash sort of, means touching people and all that. So obviously accelerated the movement towards a cashless society, but where are we in the movement towards becoming a cashless society? And what opportunities is that creating in fintech?
Sure, I'll go. Square is largely in-person businesses. At least that's how Square was started. And so it's very different than, say, Shopify or Wix or Woo, where it's online first. But we see now that over half of our businesses are also online, or they're like omni-channel, so they're selling on different marketplaces. So the notion of cash only was something we tried to sort of tackle in 2009 when we were formed. But we do have a big portion of our customer base that are small coffee shops, small food vendors, farmers markets, things like that. But they are also largely if you look at their statements, they are largely card processing now. So to be where the buyers are, they are paying by card. We don't see much of a need for cash, and that was the way we saw it 12 years ago, and it's even more so now.
Well, you're sort of invented to accelerate the move to a cashless society.
Yes,
by
we're very vested in it.
making businesses that could never accept anything but cash.
Yeah.
Allow card acceptance.
Yeah. It'll always be around. I think it just serves a smaller and smaller niche than it did even a year or two ago.
Mm-hmm. Just anecdotally, I stopped carrying cash for about the 2 weeks in advance of this, and I've always been a cash guy. The only time I missed it, literally in the last 2 weeks, was for tipping people.
Yes.
That was it. That was the only thing. Like last night at the event, I wanted to tip those bartenders.
Well, actually, I was just thinking about that this morning, because I don't do cash much anymore, but I want to tip the housekeeping. So you got to go get a little bit of cash for that.
Yeah.
So there's these little things that keep it going.
Yeah.
And people trying to fix that. There's about 3 fintechs now that have created little tipping apps that will allow you to essentially send somebody a $1 or $2 tip,
right.
Charge back to a card product. And it rolls up all of the transactions to a single transaction, so it's not very expensive for the person processing the transaction, like Apple does.
Right. Because we've had like Cash App and Venmo for a while, but this is like at a micro, almost a micro level.
Yeah.
Mm-hmm. But because squeezing the cost out of these microtransactions has been a big.
It's been very, very difficult.
Yeah.
Processing transactions under $2 is very expensive, and we're collectively trying to fix that.
So, but these, what is the cost of them sending that? Who, these new applications you're talking about? Where's the money get spent? Who make? If I tip $1, am I spending $1.50?
Yeah. So think about it as just aggregating stuff up into a single transaction. So when you buy music on Apple, for example, right? You buy $1, $2, $2. Apple actually will hold all of those transactions until they get to like $7 or $10, and then they process that $10 transaction, because then it costs them a hell of a lot cheaper than processing a dollar transaction. So what you have are these tipping companies trying to use that type of methodology to process transactions in batches, basically.
Okay, and is that a workaround until there's a better way to do it?
It's a workaround until the greedy networks decide to reduce interchange for those types of transactions.
Okay.
Yeah, and it's
Any
typically
comment
30
from the
cents
greedy
per
network?
transaction
Okay.
right now. So it's like 30 cents per transaction, no matter what the dollar figure is, plus a percentage depending on, whatever the negotiated rate is.
So that's not a technology problem, that is a business problem, more.
More or less a business problem, yeah.
It's a business model problem. It's also, they're just fixed costs for, if you dispute a dollar charge, there's a cost to that, right? So those risk fees are kind of built into that pricing.
Yeah.
So it's challenging because it still is a separate, a transaction. So someone has to do the interchange for that and the, risk for that. So there are costs there, but there are ways to try to bundle it together that could help with that.
Yeah.
So in the small business space, and a big area for fintech, and I've just observed this around the world, not just here, is small loans and micro lending, and getting access to capital for small businesses. Could you talk about what has are some of the same business problems been the things that have kept that back until fairly recently? The idea of lending a business $100, or in Africa maybe it's $1,000 or $10,000 here. It used to be you had to go to the bank and the bank would say no, and now there's all these alternative lending sources. And how is that changing liquidity for small businesses, businesses' ability for small businesses to expand, avoid going out of business because of cash flow problems, et cetera?
I mean, you're right. There's been an acceleration of those types of programs in markets like Africa. And the infrastructure in Africa for traditional banking is pretty tough. Banks are not very well trusted. Back to our earlier conversation about cash. Cash is like predominantly king in countries like Africa, right? And so companies like us view, my biggest competitor in the world is cash. It's not another company. The biggest market opportunity that we have as a company is to take cash out of the economy and put it on more stable components like hard products and things like that, so people can participate in the global economy safely and securely. I think with the establishment of things like the internet and this globalization of the economy, you're starting to see things like micro loan programs, which they've been around for like 10 or 20 years. They're just getting a little bit more recognition now than they have maybe in the past.
And maybe support it more with technology rather.
It's definitely.
They might have originally been like handing $100.
Yeah, so I work with quite a number of companies that are deploying fintech solutions in Africa, and you're right, the technology has only been created in the last 5 years to enable things like microloans and B2B payments and P2P payments and cross-border payments. I was talking to a company on Friday that's just doing a bunch of stuff in Guinea, right? And they've got like $20 million on funding, and it's a great market opportunity. And you can see more and more stuff like that happening over the next 5 to 10 years.
Yeah, but even, go ahead.
Oh, to your point earlier about what is fintech? It's the use of technology to kind of change the world of finance, and I think debt and loans just come down to risk, and the more data you have, the smarter you can be with risk,
right.
And that's what we've seen at Square Capital, where we give thousands and thousands of loans out. We can do it only to Square sellers, but we can see the data from the point of sale. So you can see the trends, you can see if it's growing, if it's going down.
Who's better positioned to know a business's viability than you're seeing with all the money flowing through, right?
Yeah, exactly. So and then we have like a suite of services too, because we have Square Payroll and we have Square Banking. So we have ways to tell where we think there's lower risk, and then just offer these micro loans in a sort of UI friendly way that people can just see and say, hey, I need $500 to buy a new rack or to buy a new showcase, and the risk is assessed through very good and very strong data that helps sort of mitigate that risk that in the past was really hard to do for small businesses. If you're a large business, you have all the statements and all that there, but if you're a new company, if you're just up and coming, if you're small, then that data was not very easily accessible.
I mean, it used to be the only place a small business could go to get capital was a bank. Right? Or some other sort of factoring type entity, which typically had, banks are risk adverse, right? And so they use traditional underwriting mechanisms like FICA as a mechanism for determining loans, right? Well, fintech companies like Square have done something really remarkable, which is looked at data in different ways, right? And created unique new underwriting algorithms that allowed them to assess risk in a different way and offer loans where traditional banks wouldn't touch them before. So,
well, fintechs coming up with their own credit scoring models, right?
Yeah,
exactly.
Yeah.
So what does that do to the banks? I mean, I'm not saying they go away, but how? I guess talk about the real threat to banks from fintech.
So it's made life competitive for banks, for sure, right? And so you have banks now that are actually starting to ingest some of these underwriting algorithms created for the fintech world into their own underwriting, right? So there's this whole revolution going on right now in banking. They're getting killed at the top by the big banks. They're getting killed at the side by the innovators and the fintechs. If they don't do something, they're going to get killed, right? And so COVID was a wake-up call from that perspective when they all had to shut down their bricks-and-mortar locations, right? And their customers went elsewhere, right? Because they didn't have digital enablement. So you're seeing a fast follow of long-tail banking to ingest white label digital banking solutions, which a lot of it is centered around lending and underwriting.
And to the extent that you can not require small businesses to provide you with additional information, like with what you guys doing with data, it's a win. Because when you can decrease that friction, you can get more businesses boarded, you can make it faster. I mean, they want to fix, in this world, they want to fix pipes, they want to go to trial, they want to do all the things that they do in their business. They don't want to provide 3 months bank statements and 3 months merchant processing statements and the birthday of your firstborn child, that sort of thing.
Yeah, interesting. I want to talk about a couple of sort of big trends that are going on in the fintech space, and these intersect with e-commerce. The big one is buy now, pay later. I write about it a lot. It's big in the news. It's about big retail brands, but it's also small businesses are increasingly offering buy now, pay later. It's both in store and online. Why is so much money pouring into this, and why are there so many buy now, pay later platforms? Why is this so hot? And you have an e-commerce company. You must have that or thinking about having that as a component.
We do have it through PayPal, but it just makes things easier, right? I mean, to the earlier point, the data is available to do that sort of immediate underwriting, and so it just makes it easy for people that maybe have financial constraints or what have you to do it. And there's some risk involved in it, obviously. I think generally the rates are higher than you would get typically, but it's just a convenience factor, and I think that's what fintech is doing is it's trying to solve these convenience issues with regard to payments.
Okay, just so if anyone doesn't know what that is, I think most people do. Typically it's you buy a dress on an e-commerce site, and instead of paying for all up front, you pay 4 cash installments, usually interest-free. There might be a fee, but usually the fee is paid by the merchant in most cases. I think some have interest-bearing versions, like Affirm, I think. But in general, it's basically layaway in reverse and handled digitally. But yeah, I mean, there's some massive acquisitions going on. I won't point at you, but and the valuations are in the hundreds or tens of billions at least, certainly. Dave, I mean, what do you think comes of this? It feels like a bubble in some way.
Well, I think again, it's a bubble that's driven on consumer value, right? Extending credit or underwriting and offering credit in a different way to to a consumer, and most of the people purchasing buy now, pay later are Gen X, Gen Z, so they're more credit unworthy or than traditional buyers. So I think it created a good value for consumers. It created a good value for merchants. It increased their customer base, net new customers. The shopping basket size has gone up. Their cost to acquire that customer is relatively modest. It's anywhere from 3 to 6%, which is an affiliate fee paid out. And then they get paid, so merchants get paid,
they get
right?
the money
So
up front.
the intermediary, that is the Affirms and the Klarnas and the After Effect, they settle with the merchant 100%. So if the consumer buys a dress at Target for $100, Target gets paid immediately, $100 in the bank, they're done, right? It's a firm that's taking the risk to get those $25 installments over 4 payments or whatever from the consumer, right? And so I think it's been kind of interesting. Certainly it's been good for merchants, it's been good for consumers when times have been, and money has been tough. Where it goes, I mean, it's hard to say. We're pretty early. I think that, we were talking about this the other day, there's been some recent stories out that one, it's starting to impact credit scores of consumers, and two, the default rates for consumers are pretty high now. If that continues to happen, you're going to see a lot of regulatory step in. You're going to see bad PR for merchants. You know, you could see a little bit of backward pedaling off of it. But there's still lots of opportunity, all kinds of vertical guys coming into play. So, yeah, we'll see where it goes.
Yeah, a couple observations. One, it seems like the risk model requires getting it right most of the time, if not almost all the time, in terms of who's going to pay you back. Because if you have a high default rate and you're fronting up all the money and you're only getting a fairly small fee per customer, the wheels fall off pretty fast if the default rates start skyrocketing.
Yeah, that's the risk. And then these guys think that they've got really cool ways of doing underwriting and assessing risk, right? They use Plaid or Finicity to connect into bank accounts. They look at social scores. I mean, they create their own secret sauce, and they feel it works.
Okay, I guess they're confident of that. So broadly, there's just a lot of M&A going on in fintech. And it seems to be driven by a few different things, and we talked about some of these when we were chatting before. This idea that there's a lot of one-trick ponies in fintech, a lot of folks that do one thing well. And how it's just, and is the sort of M&A driven, and we were talking about PayPal launching a new app or new solution I think today, or there's something written about it today, where they're rolling up, e-commerce and payments and crypto and a bunch of other things into a single application. So what's sort of the driving strategic force that's causing M&A in the fintech space, and where are the vulnerabilities? Is only doing one thing just a de facto vulnerability these days?
I think it's just a newer industry or newer take, and in any vertical, when you have sort of fragmented solutions like you have here, there's always fair amount of consolidation, and I think that's what we're starting to see here. You have a bunch of, again, like one-trick ponies, which means it's ripe for a different. I mean, the end goal is to have these services, these offerings, surface to, I guess, like small, medium businesses is one, or surface to the buyers, and it's really hard to do that. To have a go-to-market plan for every single company gets very expensive. So to find the right sort of bundles is sort of the most important. We've seen at Square. I mean, even Square has acquired Crew, which does like team management. We acquired Stitch Labs, which does like marketplaces integrations. There's so many sort of one-off solutions that we feel like at Square we can offer to a range of like millions of sellers with a sort of a better value proposition as sort of one product with an easy skin on top of it that makes it very easy to use. So I think you'll see more of that, because the go-to-market just becomes very, very expensive if you're a one-off, one-trick pony. And we're still pretty early on, not that early, but still pretty early on, especially in the crypto world too, where you have like hardware, wallets, and you have there's just so much out there, and it's very fragmented still today. Although it's been a pretty hot year in terms of deals happening.
It's really expensive, and it takes a long time to write enterprise-level software. So it makes a lot of sense for these individual one-trick ponies to get rolled up into bigger businesses.
Okay. Actually, you just mentioned crypto, and I almost feel like it's a de facto thing. I have to ask a quick take on the role of crypto in fintech today and maybe in the near future.
Well,
Dave, go ahead.
Yeah, well, so as it relates to small businesses, I think it's still early, right? I mean, but it's coming, right? I mean, PayPal has already launched the ability to buy things with PayPal using crypto. I think they launched that in March of this year, something like that. So, and PayPal has a massive consumer footprint. So it's coming. It's not ubiquitous by any stretch of the imagination because most consumers still don't own any crypto. So it's going to take a while for it to be pervasive. But it's, so it's farther out, especially at the small business level. But that's my take on it.
Yeah, I mean the underlying technology, blockchain technology, it's really interesting. That will be ubiquitous for certain things like smart contracts and stuff down the road. Cryptocurrency.
Less so for just actual like ordinary payments, right?
Yeah.
It's more of an underlying technology.
It's just
blockchain is, yeah.
It's a language, yeah. Crypto is interesting. It's not ubiquitous. It's not a regulated currency. You're not buying blue jeans with crypto. It's very speculative right now. For most folks that are buying things with crypto, they're really not buying things with crypto. They're buying things with fiat cash that's connected to a crypto account, right? And so, from our perspective as a network, we're not the monetary police. We don't care what currencies people use. We support 85 currencies globally on our network. If a type of coin becomes ubiquitous and people are buying blue jeans with it, then we'll support it on our rails. And until then, we, like everybody else, are doing tons and tons of work, working with lots of different exchanges and infrastructure providers and looking at lots of stable coin things and dabbling like everybody else.
All right. Your boss is kind of a crypto guy.
He is a crypto guy, yes. That's, yeah. We are, I think it's still very early days, like you said. There's a lot of kinks to figure out with, environment and, acceptance and things like that. So it's still pretty early. That said, I think there's something like 50 million people just in the US that own crypto. So it's a pretty large number. I think it's something like 20%. I think we're getting there, but that's more of, investment strategy as opposed to using it for like spending and processing. So I think it's still early, but there are things that will sort of come up in the coming years, like PayPal, and at Square we try to make it very very easy to buy crypto through a Cash App, but I think give it a few more years.
It just feels to me like more of an alternative asset class than a means of exchange right now.
I think that's what it is for now, but but I think it means a lot more, and there's a very big fundamental value that's very different from any other currency. So there's a good future for it. It just takes some time to work through many kinks.
Actually, any audience questions real quick? Well, we just got. I'll do a wrap up here. No? Okay. So. We just got about a minute. So I always put people on the spot with predictions, but I'm going to do that anyway. Just one quick, whether prediction or whether just something you think in the next couple of years is going to happen with SME-specific fintech that's not happening today.
I got to think about that one. I would just say more tools and services that are really easy to use, because the SMB segment is just really hard to sort of get them trained and get them to use complex systems. So just ease of use of more and more services.
Okay.
Yeah, anything that decreases friction for merchants to be able to accept payments in any way, right, across the board, I think is what's coming. And there's a lot of really smart people, a lot of really smart companies that are solving that right now. So I think
Yeah, that
it'll
would
be much bigger.
I'm just thinking lots more penetration in the small business, right? We've sort of just dabbling. It wasn't until the last year that I started to really see a lot of interesting SMB-focused fintechs, and Brex drove a lot of that froth. This is the first year, I think, in the last 4 years where I've talked more B2B plays than I have, or SMB plays than I have consumer plays as it relates to fintech banking. So I think the investment community is really excited about investments in this space, and when they're excited means there's going to be a lot of companies, which means there's just going to be a lot of stuff going on over the next year or two.
Okay, great. We have to end it there. Please join me in thanking the panel.